All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is 9:03 Eastern Standard Time this morning, Friday, July 8th. Let's rock and roll. Before we begin, bottom right-hand corner of your screen, little white logo. Click on that, turn on notifications, subscribe to our channel. Make sure to hit that like button if you love these videos. Let's go to work. Dow futures are down 31 points. NASDAQ down about 1% this morning, but bouncing post NFP. S&P 500 down about 0.47% on 3886. I'm still long S&P. Russell down 0.34% on the small caps. Crude oil up 1.28% on this non-farm payroll report, so a nice little bounce, even though gasoline is down about 0.63%. Oil is bouncing off that 100-day moving average on the hourly. Gold futures are flat, 1739. Silver futures down 0.20%. Euro dollar 101.49, down another 13 pips. Dollar yen continues to soar, 32 pips there at 136.33. Bitcoin 21,375, down 2.2%. Ethereum 1,210. We broke 1,200, down 2.85%. As of course you see, the Nasdaq futures are down. 10-year Treasury yields, we did spike 69 plus 69 here. 33.075 right now, off its highs, rejecting that 100-day on TNX. Dollar index is up 0.12%, 107.25. So that's going to hurt some commodities except crude right now. VIX is up 0.73% at 26.27. Let's go and take a look at it. And you can see we still have that gap to fill right around 25.38. I do expect us to fill that possibly today. In terms of S&P, before we get into the non-farm payroll report and I go over it, I did go over some details or some information on Twitter. So feel free to take a look at that at your leisure. You can see that we did tap that 50-day of around 38.69. Now we're bouncing. So let's go over the number together. The number here on the non-farm payroll report is we had a jump of 372,000 jobs versus the estimate of 268,000 jobs. Unemployment rate is still 3.6%. Hourly earnings still up 0.3%. That met estimates. Average hourly earnings, June 5.1% versus 5.0%. That's a beat. So again, we wanted bad news is good news. But now with still a strong labor market, now we expect the Fed to hike at least 75 basis points based on the market. So here's a couple of notes I want to read to you guys. I'll go ahead and bring this up on Twitter so you guys can see it. You can see, note that the previous 2 months of payroll figures were revised down, 74,000. This is the headline number. So the beat on the June jobs gain isn't quite so big taken into that account. So remember, we had 372. Let's say we take away 74,000. Let's say that means we're about 298 if we're going by revision. So again, we're going to stick with the headline number for now. Revisions will come next month. But again, if we kind of go by the 2 months payroll, let's say we take away 74,000 divided by 2, that gets us around 30, 36 or so, 38 on that note. Well, actually 36, excuse me. So if we take away that, then we're kind of a little less on the headline number. But still, I don't think it's really enough to really change anything. The options market is now showing increased odds of a 75 basis point hike in July. The policy-sensitive yield on the 2-year surged 13 basis points. Here are the sectors that led the gains: professional business services, leisure, hospitality, and healthcare. Labor force shrank by roughly 350,000 last year. Manufacturing employment has now reached pre-pandemic levels, so some good news, at least there. Let's see, many other sectors, hospitality, healthcare, have struggled to regain employment levels, while others, trade and transportation, have surged ahead. And then here's some more information here. Earlier this week, data showed that there were 11.2 million job openings in May. Today, we find out there are only 5.9 million job seekers in June. The massive imbalance is worrying the Fed this is what worrying the Fed in regards to wage pressures. So we know the drill. Let me see if I can fill this out. In regards to the Fed, again, we're waiting for at least a slowdown in hiking rates. So again, a weaker jobs number would have got us that, but that's not the case here. The markets have priced in a total of 180 bips for the remaining Fed meetings of this year. The Fed funds rate is expected to double. Right now we're at 2.25 or 1.75. My math is serving me right. Is expected to double around to 3.5% by December. And here's a senior portfolio manager at Federated Hermes. Steve Sharon, he says, quote, for equity markets, the too hot number will remain continued more aggressive Fed, which increases recession risk. This is bad for growth stocks, which are hit by higher rates. So that's basic. Even Bostic says we're beginning to inch in the right direction, but we need to see a lot more. Bostic says, I'm fully committed, fully supportive of 75 basis point hike in July. So a lot to unpackage. So good news and there's bad news. The good news is we got the number. Now we know what to expect. The bad news is that it was good news. So again, labor pressures still too strong. Again, people are employed. I hate to say that people employed is bad for the economy. It's just bad for inflation. It just means more demand. As you saw, has in terms of the break evens, in terms of crude oil, commodities have rolled over. Have we hit peak inflation? Not with this jobs number yet. So we're kind of in a weird place in terms of the market. So employment is too strong to panic, and recession fears are too high to be confident. So we're kind of right in the middle. So there's something that I do want to go over real quick before we start going into the charts and answering some questions is that last shoe to drop. Remember yesterday I talked about that, and people were saying, is it a bottom? Is it a bomb? It's earnings revisions. And here's the first earnings revision that we saw yesterday. Well, one of the first. Upstart. Upstart had their earnings revisions. Let's go ahead and go over that. Here it is. Upstart. Preliminary Q2 revenue about 228 million. Their estimate was 297 million. And you can see here they're previously guided at 295 to 305 million. Preliminary Q2 contribution margin 47%, previously guided 45%. Net loss 31 million to 27 million, previously guided at a net loss of 4 million. You're talking about almost 10x there. Quote, our revenue was negatively impacted by two factors approximately equally. First, our marketplace funding is constrained, largely driven by concerns about the macroeconomy among lenders and capital market participants. Second, in Q2, we took action to convert our loans on our balance sheet into cash, which then, given the quickly increasing rate environment, negatively impacted our revenue. So again, that's the first sign of earnings revisions. This is what we've been talking about. This is why we don't consider this a bottom. If we had the Fed at least being accommodative or at least stopping some rate hikes with some inflation rolling over, then we have at least some confidence moving forward. But again, we still have negative revisions to the downside for these companies. Look at Upstart. Upstart recently is at 27.42 now on the bid. Now again, it has been kind of going sideways on the daily, but if you look on the hourly, I mean, we had a nice little bounce just last week, I think, to around 42. We did it again to around 35, and again, lower highs. So the world has not been fixed as of yet. Again, you just have to be either cautiously optimistic, if anything, or just have to wait it out. I'm going to do the investment club video. Now I have non-farm payroll report. Now I can start kind of going over some forecasting here. It's going to be ahead of CPI tomorrow, next week, ahead of PPI, ahead of the Fed. So we're gonna have to work with what we got. So there you go, Brano. I answered your question regarding Upstart, but again, not good. Again, you're already seeing some weakness in the Nasdaq because of higher rates. So again, TNX is in focus. Upstart, again, we'll probably get some analyst revisions as well in terms of their price target. Maybe Upstart has a little more down to go. I would not want to do calls on Upstart right in the open. I would just want to wait and see the price action. Maybe it does bounce. Who knows? Maybe we get some buyers, but again, I'd rather just wait, especially on a Friday. Thoughts on NVIDIA calls today. In terms of NVIDIA, again, we're seeing the NASDAQ down, but again, you can see we break that 20-day moving average on the hourly. There is a gap to fill right around 150, 133, so that's probably more likely the level to go to if the NASDAQ continues to sink. Can you explain the put call ratio? Yes. So again, higher the number means more puts against calls. Lower the number means more calls against puts. It's just a pure ratio number. It's not open yet until the cash session is open. Yesterday, obviously, with 4 straight sessions of green in the S&P, you're gonna have call ratios skew more to the long side than you do put side. So that's where we are. In terms of S&P, here's the level we're looking at. 38.69 is your 50-day. Maybe you get it retest of 38.60 or so. I'm still long, but again, you can still see that we're kind of holding up. Really, all we lost here in terms of non-farm payroll was right around 20 handles. So not a huge move as what I'm used to in terms of non-farm payroll, but again, something to look for. Would you say KO is a buy? Let's go ahead and see their PE ratio. Coca-Cola, excuse me. Coca-Cola is trading at 23.78. That's pretty expensive in terms of consumer defensives. Now, if you just want the yield, that's fine. I don't think Coca-Cola is a bad stock to own. It's just a little pricey because it's crowded. Anything defensive, utilities, those sort of things are very crowded now because everyone's afraid. The time to buy Coca-Cola was really when things are turning around. So again, because then it becomes cheaper. If you just want the yield, go for it. But I think there's better opportunities out there uh, in terms of dividends. I think Coca-Cola is just a little expensive here because people are trying to get into a consistent dividend yield. AMD price to add long term. I'm not adding any stocks, honestly, until we either get a peak of inflation or 3,500. That's really the level I'm looking for. So, no, I'm not looking to buy AMD yet. Why is 819 a good expiration for puts? I don't know. Maybe you see some high volume there. More than likely, that's probably OPEX day, if anything. So that's probably when you have the quarterly expirations for options or monthly expiration for options for certain options contracts. That's probably why it has the highest volume. Morning, Carlos. Highway movement on today. Let's go and take a look at S&P futures again. Sideways movement, possibly. I mean, we did have some great last couple of days, some great bullish price action. I still think we get to 39.20. We may get there today. I would say if I had to go ahead and really pick a level that we get to, I'm gonna have to just do a range 3,900 to around 38.70. We could chop around. We've had a lot of price action, a lot of good action last couple of days. A red day today would not end the world. Oil low in yet? No, I don't think the oil low is in yet. Nice bounce, of course, but I still think we get to around 92.81, which is that 200-day, and then I get a chance to buy some. Got close around 95. I do think we do retest 92.81 eventually. So I'll just wait till then. But again, I don't think too much of today's action so far. It is pre-market. Let's see how we actually open this morning. We are starting to get a little bit of a bounce here. So maybe some assumption that things are not as bad as perceived with a strong labor market. Again, it's kind of hard to have a recession, guys, when you have a strong labor market. Very difficult to do when people are working. In terms of oil, at least oil is helping the Dow and helping the S&P right now, as tech is being the laggard, tech being the leader the last couple of days. So again, it's time to see what we get. Let's go to work. Have a great rest of your afternoon. No aftermarket report for me today. I have to go over my video with the team. I got to do a couple more charts to read and to share with them as I do my video first. So no aftermarket recap today. I'll put the recap of today's action on Instagram. If you like, you can feel free to look at that at your leisure. Have a great rest of your afternoon. Thank you so much for joining me this week. G.A.R Capital, again, the website, garcapitalfx.com. More great things to come. Thank you so much again for your time. We'll see you guys on Monday. Cheers.